Hey, we're going to get rolling here this week. We had a supply demand report out today, and this is the one thing I have to admit to you is when these reports come out, you got a USDA website on one screen, and you have a news feed on another screen, and you got the live quotes also on another screen, and usually what you're trying to do is look at all these things, and you notice the market's moving right away. And I got to tell you, when beans jumped 30 cents, about 2 seconds after this report came out, I'm wondering, man, what kind of bullish number do we get there on the bean side of it? And you had corn following suit. And then when you get back to the numbers, we really didn't have any major changes. But here are a few things that stuck out to us. One is a bean yield dropped 0.3 bushels per acre from the October report. And part of the reason why we got that higher trade in here today is everyone was leaning towards this crop getting a little bit bigger, where actually it just got a little bit smaller in here. The one thing, though, that did come as a surprise, if the bean yield was down, you would have thought the corn yield would have been lower as well, too, but that wasn't the case. The corn yield actually bumped up slightly. The other surprise to me on this report in here is that the USDA only increased ethanol usage by 50 million bushels. It was really set up in here, the way the ethanol grind was, that this could have gone up 100 million bushels. At the end of the day, there are very little changes in here on the U.S. carryout. Corn and wheat slightly smaller, beans a little bit bigger. On the worldwide basis, so you did have some changes. A surprise was the world bean ending carryout levels declining, as the USDA basically said we planted less beans in Argentina. Their crop is going to be smaller. That's why the world bean ending carryout dropped off. The world wheat carryout levels continued to decline. Okay, and that offers support. But on the other hand, the world corn carryout levels were up slightly. Again, those are our first impressions for this report. Now, when we get towards the U.S. on the bean production, where did things drop off? On this chart in front of us here, we have the top 8 producing states. Why did the top 8? Is all 8 states had production above 200 million bushels. And as you can see in here on the yield change from the October to the November, Illinois was unchanged. Iowa dropped off a bushel an acre. Indiana dropped off 3 bushels an acre. Ohio dropped off 2. And you had some slight increases from both Nebraska and South Dakota. You add it all up, that's where the little bit lower crop came into play here. Again, we're not going to disagree with these, USDA numbers too much. On the bean side of it, you're kind of nitpicking here. Our thinking was, though, when the yield increased from October, from the September to the October report, that they typically go up in November. It made a slight adjustment lower in here. At the end of the day, this bean crop's probably somewhere between 51 and 52 bushels an acre. When we get over to the corn side of it, again, we've got the top 8 producing states in here right now. Iowa's the largest producer. Their yield held unchanged at 201 bushels an acre, where the Illinois crop got a little bit smaller from 210 down to 207. You had some other adjustments lower in here, especially in the eastern corn belt, with the Indiana crop down 5 bushels an acre, and the Ohio crop was left unchanged, but you had that big drop over in Indiana. The one thing, though, that really stuck out to us when you look at these corn production numbers is the big jump you had in Minnesota of almost 8 bushels an acre, and the jump in South Dakota of 4 bushels an acre. When it was all said and done with, the U.S. yield increased about a half bushel an acre. As we move through harvest, the one thing we were picking up from producers is that you heard a little bit better than expected yields up through the northern plains, whether it's Minnesota, South Dakota, North Dakota, and that's really showing up on the state yield reports. The other interesting thing we saw from here is when you look at the last crop conditions report of the year, you had the South Dakota crop at only 21% good to excellent, the Minnesota crop at 37% good to excellent. That tells us in here right now that the perception of the crop was a lot worse than the actual harvest results in here right now. When you look at the big states, though, that had the high crop ratings, Illinois was at 70%, Indiana was at 69%, and both of those yields dropped off slightly. So here right now, you look at the crop ratings, you kind of got to take them with a grain of salt. Where the real poor crop ratings were, the crop was a little bit better. I get to the world production right now, and what I want to point out here is on the corn side of it, the previous 3 years, our corn production was relatively flat. On beans, you had 361 million metric ton produced in 18-19, and then it dropped off, bounced back in 2020 to the same, but forecast to be record high now. On wheat, you've had a gradual increase in production. My point with this is that in 2019 and 2020, there wasn't the economic incentive out there, not only here in the US, but around the world to increase acres and go all out on production. Now you get to 2021, you have that economic incentive, and granted you need weather, but the increased acreage in here really helps push along global production. We would expect that the same as we look ahead to next year. So what does this report tell us? You know, you got to look at the wheat side of it and say if we have a bullish leader, it still can be wheat. This is a monthly Minneapolis wheat chart. As you can see by this, there's key resistance at this 1120 area. We think there's still some good support underneath the Minneapolis wheat market. It's not a market we would be bearish on. There is a good demand base there, and we think with Minneapolis wheat, demand is relatively inelastic. As we get over to the corn market, we put on these two lines that are beginning in January of 2021 between $5 and $6. We think you can call corn in this range in here right now. If anything, this report was not as bullish as what people would have hoped for, and so you'd probably got to roll that range, the price down to the lower end of the range. The other thing to keep in mind is the first 3 months of the year, front month corn spent a lot of time in that $5.50 range, about what we're trading at right now. Now when I get over to the weekly bean chart and I have the lines drawn the same from the beginning of the year, they're between $11 and $12.50. The one thing to point out is in the beginning of the year, we traded beans a lot in that $11.50 to $12 range. And since the beginning of the year, the bean fundamentals have gotten a little more negative compared to that of corn. Yet, we've got bean prices a little bit higher than we were sitting the first couple of months of the year. This tells us that the bean market is still a little more vulnerable to a break, even though they didn't get the bearish report in here as U.S. yields went down slightly. Now, as we want to wrap things up in here today, these are kind of our final thoughts, and it's really the same as before the report. You know, the wheat market is still the bullish catalyst, okay? I mean, you have the drawdown in U.S. carryout, you got the drawdown in world carryout, we've had some good demand in here. Okay, that is still a positive report. Now the question is all the bullishness priced in at $8 wheat? Is it priced in at $10.50 wheat on Minneapolis? We think that's the biggest question, but we wouldn't be bearish the wheat market. As you get towards corn, you know, with the large spec buying over the last few weeks and the specs building up their biggest net long position since May in here right now, what bothers us just sitting here after the report is that the supply demand fundamental numbers on corn, okay, are not as bullish, okay, as what they were in the October. And we know in the U.S. that the ending carryout levels went down, but worldwide they went up. That is a little bit of concern. So corn does not have that bullish attitude like what we have over in the wheat market. And since we rallied with the spec buying, we just got to be a little concerned. For soybeans, though, this report is not as bearish as what people would have expected or the markets. It's still not a bullish report in here, as our carryout levels are plenty high in the case of the U.S. growing, but that drawdown in world carryout level needs to be respected. At the end of the day, this report, okay, is not a trend changer on really any of these markets. You know, wheat is still the strong link, beans are the weak link, and corn's floating somewhere in between. We think the crop size is still going to be debated between now and the end of the year. You know, the adjustments that the USDA made in here, I mean, the bean yield is probably getting pretty close, but the corn crop would probably get a little bit bigger. We think the focus of the markets over the next couple of months is going to shift to demand. We'll even talk about this on next week's webinar in here, where U.S. prices are at compared to the rest of the world. We need a demand-led rally. We're concerned with bean demand. We're not concerned at all on wheat demand. That should be pretty strong. The next thing is the 2022 acreage mix. I mean, fall fertilizer application, nitrogen prices. I mean, we've been talking nitrogen prices, you know, on the phone. It seems like more than we talk about the corn market. I mean, that is going to have huge influence on next year's acreage mix. You know, so that's something to to consider, and we need to keep in mind. Any suggestions in upcoming webinars? Feel free to drop us an email or give us a ring. Again, like our page on the YouTube channel. And any questions, give us a ring. Have a great day.